Today our topic is under subscription. Now what is under subscription? If number of subscribed share is less than number of issued share. Subscribed share is less than issued share. In that case we call that is an under subscription of share. Suppose issued share by the company is 10,000 shares issued by the company, and public subscribed for 8,000 shares. In this case subscribed share is less than issued share, so this 2,000 share is called under subscription. What is written here? If subscribed capital is less than issued capital, then it is called under subscription of share. Example, company issued 10,000 shares for public subscription, but application received for 8,000 shares. This is called under subscription of share. What is written here? Subscribed share is 8,000 and issued share is 10,000. In this case our total sums will be done with these subscribed share. There is no place is there for issued share. In total sums 10,000 shares, we will not write anywhere in 10,000 shares. Total sums will be done with this subscribed share, that is 8,000 share. And how much share is undersubscribed? Undersubscribed share is the difference between these two. Difference between these two is 2,000 shares, and 2,000 share is undersubscribed. Now we will do a sum with this. Sum number 3 is with undersubscribed share. What is the question? Question is, Kalyan Cotton Mills Limited registered with 1 lakh shares of rupees 10 each. Now the registered share means the nominal capital. What is nominal capital? Nominal capital is maximum amount of share to be issued by the company. That is called the registered capital or nominal capital. Here the registered capital of the company is 1 lakh shares of rupees 10 each. That means total registered capital of the company is 1 lakh multiplied by 10, that is 10 lakh. The company issued 40,000 shares on 15th January 2019. Now company not issued the entire share. Company issued only 42,000 shares out of 1 lakh shares. On which date? Here date is mentioned, and date is 15 January 2019, of which 40,000 shares were subscribed by the public. Now company issued 42,000 shares, but public subscribed for the 40,000 shares. That means the public subscribed for the lesser amount of shares, and rupees 1 per share received as application money. So here it is written that application money is rupees 1 per share, and this rupees 1 per share is received for 40,000 shares. Next, on 1st February 2019 these shares were allotted. Now on February these shares were allotted. How much shares were allotted? The subscribed shares were allotted, because the subscribed share is less than the issued shares, and rupees 2 per shares were duly received on 28th February. Now the call is made on 1st February 2019 for allotment, and the amount received on 28th January. Here all the date is mentioned, so we have to write this date in our journal. So allotment money is rupees 2. Allotment money is received on 28 January 2019 as allotment money. A first call of rupees 3 per share was made on 1st March 2019. Here the due date of first call is on the date is mentioned, that is 1st March 2019, and the first call money is rupees 3, and call money on all shares were received on 18th March 2019. And there is another call, that is the final call of rupees 4 per share was made on 1st June 2019, and all the money were received on 25th June 2019. So there is 4 installment. First one is application, that is of rupees 1. Second one is allotment, that is rupees 2. So adding this 2, we will get 3, and first call money is rupees 3. So 3 plus 3 is 6, and the final call money is given here. The final call 4, yes, 6 plus 4, that is 10. The value of share is rupees 10, and there is 4 installment. What we have to do? We have to do show cash book and journal entries. Here is another thing, that is you have to prepare cash book and journal entries. In this case, the all cash entry or bank entry, we will do that cash or bank entry in cash book, and other entries, that is the due entries and transfer entries, we will do in journal entries. Okay, then now we will do these sums. This sum, according to sum, authorized capital of the company is 1 lakh shares of rupees 10 each, that is authorized capital is rupees 10 lakh. Issued capital 42,000 shares of rupees 10 each, that is rupees 4,20,000. But the entire amount was not subscribed by the public. So subscribed capital is 40,000 shares of rupees 10 each, that is rupees 4 lakh. So under subscription of share is 2,000 share. We will do the entire sums with this 40,000 shares. We will not touch this 42,000 shares. Now we have to prepare one cash book and one journal entries. We know cash book is a part of journal. Cash book is also a journal. So cash book and journal both we have to prepare. Cash and bank entry we will do in cash book, and other entries we will do in journal. Now how to prepare this cash book and journal entries? Look here, I have done in one page cash book, in another page there is journal entries. We will do these two simultaneously. In case of bank entry, we will put it in cash book, and in case of journal entries, that is the transfer entries and due entries, we will put it in journal. So here it is a cash book column, and here it is a journal format. So you have to do simultaneously these two. First we will do this cash book with the bank entries. Now you know the format of cash book. In 11 you have done in cash book. What is the format? Cash book format is a type of ledger format. There is two sides, one is debit side, another is credit side. On the top of the cash book you have to write, in the books of Kalyan Cotton Mills Limited, cash book. Here we are doing only the bank column, so it is written here bank column. In case of in class 11 you have done two column cash book, that is one is cash column and another is bank column. Here we are doing only the bank column, so here it is written that bank column. There is two side of cash book, one is debit side, another is credit side. We have to write this debit and credit in both corner. In debit side there are four columns, one is debt, another is particulars, then ledger folio, because cash book is a journal, so we have to write ledger folio here, and the amount column, and rupees is mandatory to write here. In credit side also there is four column, same as debit side, that is date, particulars, ledger folio and rupees. And in case of journal format, you know what is the journal format. You have to here date, particulars, ledger folio, debit rupees and credit rupees. Now in the sums, first what you which entry you have to do? First entry is the application money received entry. So what will be the entry? That is the bank account debit to share application account. Now this is a bank entry. So this entry you have to do in the cash book, because here is a bank, it is a bank entry. So cash book bank column, that means it is a bank account. Okay, so what is the journal? Bank account debit to share application account. And we know in case of receipt, in case of cash book, receipts are recorded in debit side. Here amount is received by the company and date is mentioned 2019 January 15 to share application account. To share application account, bank account debit to share application. So to share application, we will write here to share application. What is the amount? 40,000 shares. Application money received for 40,000 shares. So 40,000 into rupees 1. So amount is 40,000. In cash book, you have to write the narration. So what is the narration? Being application money received on 40,000 shares of rupees 1 each. So the received entry of application money is done here. Now the transfer entry. Transfer entry, what is the transfer entry? Transfer entry is share application account debit to equity share capital. Here bank entry, this is not a bank entry. So this entry we have to put in journal entries. So for the transfer entry, we will do it in our journal. In date column 2019 June 15, because in the question it is mentioned that application money was received in January 15 and the transfer, the date on which transfer is made, that is not written. So we have done, we write here January 15. What is the transfer entry? Transfer entry is share application account debit to equity share capital account. All the amount is transferred to capital account. So amount received in application, we have transferred it in capital account. What is the narration? Being application money on 40,000 shares of rupees 1 each transferred to equity share capital account as per board resolution number dated. Now application part is complete. Next part is allotment part, and in case of allotment, we know allotment is made on for allotment, first we have to pass the due entry. So in the question it is written that on February 1 allotment due was made. So on the date of February 1 2019, we have to pass the transfer due entry. What is the transfer due entry? That is share allotment account debit to equity share capital account, and amount is rupees 2 per share. So 40,000 shares multiplied by rupees 2. So total due allotment money is 80,000. Narration is being 40,000 shares were allotted and due on allotment money transferred to equity share capital account as per bear number dated. Now due on allotment money is also made here. Next question is receipt of allotment money. The entire amount received by the company, there is no defaulter. So received entry, that means that is a bank entry. In case of bank entry, we have to do it in our cash book. So we are going to cash book. What will be the entry? Entry will be the bank account debit to share allotment account, and date is February 28 mentioned in the question. So we do here in cash book debit side, that is the receipt side, to share allotment account, entire amount received, that is 80,000. What is the narration? Being allotment money received on 40,000 shares of rupees 2 each. Allotment part is over now. Next part is first call. For first call, we have to pass first due entry. So for due entry, there is no bank entry. We have to do it in our journal. So we came to journal. Allotment, first call was made on March 1. So March 1, due entry has been passed, that is share first call account debit to equity share capital account. Amount per share is rupees 3 for the first call. So 40,000 multiplied by 3, that is 1,20,000. 1,20,000 is the due amount for the first call. So narration is being due on first call money transferred to equity share capital account on 40,000 shares of rupees 3 each as per beer number dated. This is the first call due transfer entry. For this first call, next part is received entry. So for the first call, received entry, that is a bank entry, we have to do it in our cash book. So in cash book on March 28, received has been made for the first call. So entry is bank account debit to share first call. So we are writing here to share first call account. Entire amount received by the company, so amount is 1,20,000. Narration is being first call money received on 40,000 shares of rupees 3 each. First call part is over now. Next part is final call. Final call has been made, and so first we have to pass the due transfer entry, and the due transfer entry we have to do it in our journal. So in case of journal, on June 1, share final call account debit to equity share capital account. This is the due transfer entry. Per share final call is rupees 4. So 40,000 into 4, 1,60,000 is due for final call. Entry is, narration is being due on final call money transferred to equity share capital account on 40,000 share of rupees 4 each as per beer number dated. This is the due transfer entry. Next is the received entry for final call, and received entry is a bank entry. So we have to do it in our cash book. So come to cash book. Journal is bank account debit to share final call, and the date is June 30. June 30, the bank entry has been passed, that is bank account debit to share final call account. Amount is 1,60,000 because entire amount has been received by the company. Narration is being share final call money received on 40,000 shares of rupees 4 each. Now total journal is complete. What we have to do for the cash book, we have to balance it. Now what is the balance? Balance is 4 lakh. That means total amount received for share is rupees 4 lakhs. In debit side, there is various amount, you have to add this. In credit side, there is no amount, so the balance is 4 lakh. This is the total bank amount for the issue of share. This bank account is this cash book is a part of total cash book. This cash book is a part of total cash book. So this 4 lakh is only for the issue of share, 4 lakhs, and the total amount. So total number of share is 40,000. So the capital value is also 40,000 into rupees 10, that is 4 lakh. Now when you have to do the cash book, you have to prepare the cash book when it is mentioned in the question. If in the question it is mentioned that prepare cash book and prepare journal entries, in that case you have to do this cash book. Otherwise you have to do the total journal in your journal. Okay, thank you for today. You have to do these sums in your copy. First copy the question and then try to do it in your own.